The title of our topic this month was pretty interesting. Bubbles are bursting, prices are falling, multiple offers. How the heck does all this come together? Well, honestly, they all have something big in common with this last month here in August. And what that is that none of that was happening. Absolutely none of that was happening. August, for all intents and purposes, was kind of a boring month. There's a lot, there wasn't a lot of brand new things, new trends that formed, or data points that got me really worried. But I am going to hit on some things that will hit home for you as we move now to the fall season, which is a lot different than the spring season and obviously the summer seasons. We all, each real estate market cycles differently here in Calgary. So please tune in. So the title from the Calgary Real Estate Board this month was "A Housing Recovery is a Balancing Act." So what does this mean, right? Again, there's a lot of cheeky little headlines, no different than mine today. Well, as I mentioned the last month, there had been 3 consecutive months in a row where inventory was higher this year than it was in 2016. Right, the beginning of the year, it was the opposite. That little mini trend has now continued on, and I think I would say a full true trend is forming, and I can probably expect that inventory will continue to be higher for the balance of this year. So half of this year so far, inventory higher, half of it lower. Now, if you can pull up, Dave, graph number 1, we'll kind of comment on this a little bit. There's 2 lines on this graph. One of them is at the top, and you can see it's a slightly gradual decline. And then the bottom graph with the arrow is showing a steeper. So hopefully you guys can see that. And basically all I wanted to do is point out the differences between these 2 lines. We all understand flat versus up versus down. Well, the bottom line is our sales. It has continued to drop month after month faster than the inventory. So that is something I'm watching for, and I want you to kind of be aware of at the beginning here. But there's also something, so typically when this happens, when inventory stays fairly high or is rising and sales is declining, we would see downward pressure on prices and resultant price drops. But I'm here to tell you that that's not happening, which is really good for us. So sales are remaining higher than they were last year for detached and attached homes. The detached homes still sits at 8% more than last year. Attached homes is doing the best, actually, at 11% more than last year. But the struggle is still super real with the apartment segment, which is only gaining 5% over what it was last year. And inventory, unfortunately, has continued to push forward. I'll show you this briefly on graph 2. Dave, can you pull that up for us? Awesome. No, actually, that's not the one I wanted. Actually, yeah, let's go back to that one. That'll work. So this one it's tough to see, but I highlighted one little part here on the top of the graph, and it's a band. And it's showing that, yes, sales are higher a little bit this year for the apartment world, but the volume of trades we're sold a little bit more, but the volume isn't larger than, sorry, I'm fumbling here. But the volume of total sales is less than I'd like it to see, which means we've sold more, but the price points of these sales have been less. So what that means is the apartment market is declining in price. So if it was going up, we'd see massive volume uptick, but we're not. We're seeing more sales, but the prices are cheaper. So hence the price trajectory going downward. Another graph, which is the one that we were talking about at first, points this out. So you can see, no, go back to the other one, Dave. Yeah, that one there. So you'll see that one has an arrow downward that I put on the left side. And all that is saying is this is where we started on the left side of the year, and it's been trickling downward, and that's why we're seeing a difference in pricing. And that's because inventory and sales just that supply demand hasn't been in our favor. So yeah, that's what I wanted to point out. Here, let me scroll down. So basically, guys, the market in general is doing marginally better than we did last year, right? We've got 8 months of the year behind us, which is 2/3 of the year. The market that is showing the best signs of increasing are between the 600 to the 800 $1,000 price points. So we're seeing this in two things, right? They are still selling, so right now in that price range, 600 to 800,000, which is a big bulk of our market, right? They are still selling more in this price range than they did at this time in 2016. So we've seen a year-over-year uptick, but we're also seeing kind of a year-to-date that it's 30% plus. So that's the biggest bump in price ranges over last year across the entire market, from the 100,000s all the way to the 4 million plus. This $600,000 to $800,000 price band has got the best bump over last year. So again, you could, if you're a seller in that marketplace, you're going to feel very confident that you're going to achieve your goals in selling it. Now, I think there's a graph we have to show this. Yeah, so that one is, so there's this graph, and there's actually go to the next one too. This one, I've got 4 little arrows, and what it's doing is pointing to a band across the bottom. There's this red band that I've highlighted, and that's that price range is between 6, 7, 8, which the farthest right bar in each column is better than last year, and that's that sweet spot where we're seeing great sales through. And again, if you're a buyer, a lot of that is inner city properties, 600, 800,000 infills. Like I pointed out on that graph that we pulled up first, I do believe there's like this hyper segment around infills that has done really well. You could pull that one up now, Dave. No, the first one. Keep going. That's okay. One more. That one. So that one is specific to what I believe is the infills, just doing a much better than last year. I think for those of you that have had infills or developers or builders that are trying to sell these through, you're seeing, yeah, it's a lot better this year selling than it was last year. So yeah, so we'll move on beyond that. The other thing I'm seeing is that from the 800,000 price point all the way up to the $1.5 million price point, you're seeing about 20% better this year than last year. And that goes all the way through last month here through August. So again, 600 all the way to 1.5. Typically here we're 20% better than last year, all the way up to the mid 40s. So again, a very healthy market segment in comparison to for those that if you tried to sell last year and had a bit of a difficulty, or this might be a really good time to consider going back to market and achieving that next life goal that you're trying to accomplish, right? That next transition. So yeah, there's lots of time this year to still do that, which I'll comment on in a little bit, because September and October, you do see a bump, right? July slows down from June, August gets fairly sleepy, Calgarians are off on vacation, most of us in BC. And then what happens, school's back, right? And September rhythm comes back in our days. So September and October, you see a bit of a bump here as we get closer to Christmas. And a lot of people would love to make a trade before Christmas time, have that Christmas tree up and sparkly in their brand new home. So what does this mean, guys, to sellers right now? I brought this kind of segment in last time, and I think it worked really well. So for you, if you're a seller, what do you need to know? Well, it's quite simple yet again. And local area specific, price range specific, and property type specific, you have to engage a realtor to understand where you fit within Calgary's current marketplace. Inventory is climbing in almost all of the property types, like I talked about at the beginning. So pricing needs to be paramount, and finding ways to kind of cut through the clutter of the crowd out there, to expose your property and to take advantage of this kind of resurgent market in September, October. You need to be on point when it comes to pricing. I'm going to pull up another graph to explain this, I think, a little bit better. Let's go to the shifted market. Do you have that one there, Dave? No, not that one. It's one. There we go. So this is a graph. I actually use this in oftentimes my listing presentations, and this is something I thought I'd pull out. So as we shift from summer, spring season to fall, Yes, there's a resurgence in purchases, but the reality is the overall benchmark prices or average prices tends to drop from here to Christmas. So if that's the case, we have to even be more mindful about pricing properly. And there is cost to overpricing that I want you as a seller to be very aware of. Couple that with the inventory climb that we've seen the last 4 months, year over year. It's been climbing. So we have this little bit of a scenario where it's really easy to get caught up and overprice a home. When we overprice a home in what I call a shifted market, which is what we're having now, is the buyer's perspective and the buyer's perception of your home price drops off quicker, right? You see that graph, there's a little green graph, I think it's green, and it goes up and then it skews downward, right? In a stable market, that graph is a little bit more rounded and a little more forgiving. And what I'm trying to say now is in this shifted market for sellers, that when we go live, we have to price properly, and you have to try to sell within those first 3 weeks-ish, 3 to 4 weeks. And if not, the buyers will start to forget about you quicker than they would when market's very stable. So just be mindful of that. The top graph, it's kind of like a stair. That's as good as I can do for a stair. I'll try. But anyways, sellers always want more, right? We all want more when we're selling our house. I get it. But we tend to start there, and your realtors let you get there. But then we make a course correction, and we make a course correction, and we make another one. But as you see that gap between what your home value is and that perceived market price starts to grow. When that happens, that's when you get low balls. That's when you get frustrated. So my suggestion for sellers is to price it right first. Don't be the one chasing that perceived market price, and get there early, right? You will help yourself. I promise you. It's counterintuitive, but it is the way to do it, the way to get the maximum dollar in the quickest amount of time. So that's that one. Actually, hold on. There's another graph to talk about kind of the shifted market, and that's this one. This is very, very interesting. It's the most simple graph you'll ever see here on the Redline Update show. But basically what this is in the shifted market, we've got 3 bands of property, right? We've got in the market, which is kind of tucked in nice and down at the bottom. We've got no man's land, and then we've got out of the market. And what this means to me, and I want you to understand, is that in a shifted market, when buyers' perception of your home value drops so quickly and the inventory is high, so they have lots of choice, that sweet spot to hit in the market is smaller. You have to hit the nail on the head, because you can easily find yourself in that second band, which is called no man's land. And no man's land is where you're getting showings, but you're not getting second showings on your home, and you're not getting offers, and you're frustrated because you feel good because the showings are happening. Your realtor feels good because showings are happening, but then he's got no answer, or she's got no answer to what's going on. And it's because you're stuck in no man's land, and you've priced yourself back on that step ladder graph. You're a little bit higher than what the market wants you to see. So that's important for you to realize. You want to get out of no man's land. And when the prices are declining a little bit, it's very easy to be falling in that, because a realtor that's not doing a lot of volume won't actually understand that this is happening. So you want to make sure you're with somebody that can give you a good understanding of the cadence of what's happening as far as selling, so that we can catch you if you're stuck in no man's land and get you into the in the market zone ASAP. Now, out of the market is just if you're pricing as if this was 2014 and you're not taking all of this into consideration, you want to get as much as you could out of it, but you're not really listening to the value and what people are truly paying for your home. So there, you're not getting offers, you're not getting showings, you're really not on the market. So again, something to be mindful of as a seller. All right, that's it for sellers. For buyers, so what do you think this means, right? I've spoken heavily about pricing. So does this mean deals for you? Does it mean lowball offers because sellers are motivated and they're desperate? But I'm here to say no, it doesn't, right? One thing for you to know is that sellers have in general course corrected very well over the last few years in Calgary, since the peak to our flat line in 2015 to last year's first bit of price drops to this year's mini rebound. Like, sellers have actually, I guess, got comfortable with the idea that their home is probably worth the same or less than it was in 2014. And they've adjusted that way. So when they're coming to market, things are selling. The list price to sale price ratios are actually fairly tight. And that means the sellers are doing a good job of pricing their home. The buyers, even among all the inventory, are seeing good value. So just be mindful of that. Now, the one caveat here, guys, is obviously it's the market in the apartment segment. There is a lot of inventory, and it's not easy to sell a property in this market. So you can capture better deals there. If you're a first-time buyer, if you're an investor that likes the investment marketplace, this would be a great time to consider it, because you are catching a market that's on the decline, and sellers are being pushed to take prices that they're not as comfortable with. But if they want to sell, this is the time to be doing it. So, yeah, if we go back to the shifted market graph, the big complex one, and that I hinted at, almost there. There we go. We go back to here. With the market in the apartment segment, it's full on shifted and going downward. We're finding the buyer's perception is really quite low, and you need to be super mindful that when you're not getting showings, it's truly the fact of pricing, right? There's a very good chance that your home is staged nicely, it looks great, the photos are great, but because the market's shifted so much, to get showings at all and to get traction, you're gonna have to be aggressive on your pricing. And buyers realize this because it's been in the media for a long time. So yeah, I think we might be almost done with graphs. No, I'm not letting Dave off the hook quite yet. So I broke a series of graphs. I take the data that Krebs gets us and I go deeper. And I made 3 different graphs based on 0 to 500,000, from 500 to 1 million, and then 1 million up. And the ones that I wanted to show you were around kind of what the peaks and valleys with the seasonal market and what September, October typically brings us versus, you know, the pace of the market back in, say, May and June. So if we go to graph number, well, let's go to graph 8 first. So this one here, so this one is luxury sales over the last 12 months. We go back all the way to September on the far left, and then all the way to here, just the recent August. And what you see here, there's quite a bump, right? We see this mass seasonal bump for these lines. But what I want you to point you out to on this graph is for those of you that are in that 1,200,000, 1,400,000, 1,500,000 and above, you can actually see there's quite a gap between the colors of these lines. And what I want you to see is that, sure, when you're at the 1,000,000 to 1,250,000, that's the blue line. Then your 1,250,000 to 1,500,000 is the orange line, and then it just goes higher priced. And you'll see there's quite a change in overall sales activity. So if you're in that, if you're in the luxury bracket and you're trying to say, how well will I be able to sell my home this year? Just be mindful that when you're higher up you go, there's just that many less sales happening, and there's a big drop off that starts to happen at this time of year. So we hit our peak. Now that the graph has come way down, and we're going to settle down September, October, and there's not a ton of luxury properties that are going to sell in comparison to what happened these last 3-4 months. So just be mindful of that, be realistic. There are buyers out there, obviously, but just know that the higher you go, it changes quickly on the overall sales that happen. Something that's a little different though is if you go to graph 7, Dave, this is that 500 to 1 million price points. The difference here is these graphs don't have big gaps, do they? There is right at the, you know, the very the blue line at the top is 500 to 550. The orange line is 550 to 600, and then it goes, everything compresses. So what we're seeing is that it almost doesn't matter if you've got homes between 600 and almost say 800. they're all selling relatively about the same. There's a ton of activity across all those. So it's a little different than the luxury bracket where it doesn't change a lot as the price goes up here between say 5 and 9. They're all doing about the same pace, and you're not going to see as much of a slowdown as you do. So yeah, that is something I wanted to point out. When you look at the lower price points, the graph is a little too convoluted, and it's really probably not even worth showing. So we will move on from that one. Scrap that one. Awesome. So that's kind of the market in general and my analysis of it. I always do a little bit of kind of what are the hot communities. And again, what are hot communities? In my opinion, they're the ones that when new listings come, the percentage of the new listings that sell through it is a ratio that matters to me. So the more of the new listings that sell in that calendar 30 days of a month, the more active that community is. So this month, we definitely saw Palliser, Cedarbrae very close to each other, and Banff Trail just kicking it. They definitely outpaced their new listings almost 2-1. So Banff Trail's been good almost all year long, and again, it's got a great value price point for developers. The RC2 and the infills are selling well, so you're seeing people buy in there and trade. The Pallisers and the Cedarbraes fall sweetly in the Calgary real estate sweet spot, right near average price points or even slightly below. So that's why, again, those are selling extremely well. So if you've got a listing coming, talk to me, because we're going to be able to get you great dollars on your property and probably in fairly short order. And then the other flip side of the hot communities would be those with low inventory. Now, obviously, some communities with very few home sales per month, we're not going to talk about those ones because they're always going to have a low inventory. But these larger communities that have 500 plus homes, there's a few of them this month that have extremely low inventory that, again, if you are a seller, that you should know this and your realtor should be pricing accordingly. Or if you're a buyer, you just might have to be patient or have to snap up things really quickly as they come. And that's Silver Springs in the northwest, inventory of 1 month. Garrison Green in the southwest, again, only inventory of 1 month. And then Riverbend continues to kick butt. And it's been great almost all year long, where inventory is very light. It's a great price point, great affordability. So again, you're doing well, Riverbend. We commend you. I've got more data, I've got more stats, but I think I've probably hit it. How long are we right now, Dave? Any idea? I don't.
30 minutes.
30 minutes. Holy smokes. Okay, so I am going to end this talk. 30 minutes is a lot. So we have more data, we have more graphs, but this is super hyper local information that should matter to you as a Calgarian. If you are looking to sell or you just need information, it's hard to go off these gross macro stats. So please hit us up. Put in a comment about what you're looking for, and we're happy. We watch the feed because we know live is hard to get engagement when we're on our business profile pages. But please, if you see this and you come across this when we're rebroadcasting it, put in your comments and we're going to happily dig into this, and one of us will reach back and give you the information you're looking for. So yeah, I really want this to be about you guys. Again, I'm trying to provide as much of the information that I think is important to you, but again, I'm not you. So please reach out, comment away, and let me know what else we can help with. And otherwise, guys, stay tuned for the next one next month, and then everything else we deliver in between. So again, thanks for spending your time with me. The rebroadcast will have items, and you'll be able to actually see where we're speaking about certain topics as well. All right, guys, talk to you later.